Hi everyone, I'm Bag of Don at StockMarketCaddy.com, and today is Wednesday, December 13th at noon. We're just 2 hours away from the Federal Reserve. What are the markets going to do? Do you know what you are going to do? Let me show you something. This is SMC, Stock Market Caddy, the Swing Machine Plus. Some 25 to 30 days ago, here's the S&P. Our members got the signal to go long 25 days ago. That's what that signal is. It was to go long at, or it did go long at 4382.78. Now we have other systems as well that got in even much sooner. But Swing Machine on a daily interval at 4 p.m. on November 8th started trending up. Now it hasn't delivered just $263. This is the S&P cash, and you cannot trade the S&P cash with individual shares. You can do it with options, but this reflects what one share would have done. It's delivered 263 points. If a person had purchased a call option 30 to 35 days ago at this price, with that much time left, it would have cost them about $6,500, and they would be up about $25,000 to $30,000 with a call option. The VIX warned our members 30 days ago, 5 days before that signal, that it was turning down, trending down. A VIX that is trending down is a warning that the market wants to go up. The S&P futures on a daily went long 23 days ago. Now, if you had used call options or shares, you'd have a different amount. But if you had put in one mini contract with Swing Machine at this price, at this time, on this date, one mini, you would be up about $11,000. One micro, $1,100. 10 minis, over $100,000. The NASDAQ, 26 days ago, one mini, 20 grand. The Russell, 18 days ago, 3875. The Dow, 23 days ago, 11,000. Oil futures short 31 days ago, 11,000 plus. Gold futures long 40 days ago, dipping but still long, up 940. Silver short 3 days ago, up 790. Euro futures long 25 days ago, dipping on the trend and up 950. Now, what you want to know, what I want to know, is what is next, because we just showed you the date. Let me bring you to this aspect of Swing Machine. What do we see? We see the S&P at 90 pushing into euphoria. You see, this is the fear gauge. The VIX is at 20, darn near in panic sell. The S&P futures also at 90. We would expect that. S&P cash, S&P futures, virtually very close to the same. Look at the NASDAQ in euphoria. What does that mean to us? It means that the likelihood that we're going to push back toward at least 4580 on the S&P, or in the NASDAQ toward 16,055, the likelihood that we're going to do that, and the likelihood that the VIX is going to come back to 1362 over the next 20 days is about 95%. Not 100%, but 95%. This fair gauge on Swing Machine gives us great visibility on how to allocate our funds. Will we be buying this rally now? No. We were buying it 3-4 weeks ago, minimum. If the Fed comes out and the market rallies, what will we be doing? We will be selling into it. We will be using futures intraday for the next several days. Anyways, we use futures almost every day, intraday. But on a swing basis, going out days and weeks, we will define our risk and use options. We will buy puts. We will sell call spreads. We make our decisions mechanically and robotically, and it's purely the math. We're not interested in what the Fed says. We're not even really interested in what the Fed does. We're only interested in tracking money flow. If this approach interests you, be sure to visit stockmarketcaddy.com. Email us your questions if you have any. And if you still have questions, you're always welcome to give us a call at 813-758-8263. We wish you the best. Thanks.